Hi, good morning, good afternoon, everybody, and welcome to the May edition of the Holland FinTech Monthly Meetup. Today's edition is a special edition of the Meetup, and this is in partnership with Startupbootcamp. For this reason, we have quite a lot of interesting startups aligned to give you some pitch, an interesting pitch around their solution. But to briefly introduce myself, I am Gabriele Pippo. I am an account manager at Holland FinTech, and I'll be your Meetup host for today's session. If we can go to the next slide, we can briefly go through the agenda for today's event. Right now, we are within the welcome words from Holland FinTech, as you can imagine. In a second, I'll be leaving the word to Elizabeth Kleinveld from Startupbootcamp from a brief introduction from their side, followed by the traditional FinTech market update hosted by our CEO and founder, Don Ginsel. And finally, at the end of the market update, we will be separating into three different sessions. One focused on investments, the second one focused on Regtech and cybersecurity, and lastly, but not least, of course, the payments and trust session. At the end of every session, we will be announcing the best company pitch. And I'd like to take this opportunity to explain how this is going to work. Basically, at the end of every pitch during the Q&A session, you'll be able to vote to rate the company's pitch in the post section on the right-hand side of the screen, as well as provide us some feedback to continuously improve the experience of the meetup. By doing so, then we'll be able to announce the best company pitch of each session. And then, of course, the final closing comments will be made to close off the event. If we can go to the next slide, maybe I can quickly introduce the other two moderators for today's session, Esther Groen and Don Ginsel. Esther has a strong background within payments and banking. She is a former partner at Coupay, and now she's working for Holland FinTech as an advisor to the board, whereas Don Ginsel is, as I mentioned before, our CEO and founder, and they'll be moderating respectively the payments and trust session and the investment session. Now, I think it is time to leave the word to Elizabeth. Elizabeth is a partner success manager at Startupbootcamp. Elizabeth, whenever you're ready, I can see you already have your camera on. Feel free to take the stage.
Thank you so much. So I'm Elizabeth Kleinveld. I'm responsible for the partners in our FinTech and cybersecurity program, as well as the sustainability program. And for those of you who don't know me, I also worked with Holland FinTech, and I'm very proud that all the startups in the FinTech and cybersecurity program are able to have access to this wonderful community. This is the 5th time that we've had our startups pitch for the Holland FinTech ecosystem. We're currently looking for mentors for our new programs, for the sustainability program and the FinTech program. So if you'd like to be a mentor, I'm going to put my information and more information about the program in the chat so that you can reach out to me directly. And with that, I'm going to leave the floor to Dawn to take you through. Thank you so much for having us again.
Thanks, Elizabeth. Looking forward to the presentations this afternoon. Thanks for setting this up with us. And now it is time to leave the word to Don to take us through the FinTech monthly update. So Don, whenever you're ready, feel free to turn on your camera and take us through the presentation.
Yes, thank you, Gabriele, and very nice to, well, not really see you all again, but I have the feeling that you are out there somewhere, and I see some names popping up in the list, but of course, this is not really the experience that we're all looking for, and I'm really hoping to actually meet you again in person soon. Let's see if I could actually get you up some visuals to show you what especially also my colleagues have been working on to give you an oversight of what's happened last month. I hope you will enjoy it, and definitely just also to give it a bit of context. For us, the community also is really about trying to educate and keep each other up to date about where the market is standing, where the opportunities are, how to collaborate, and to keep a good eye out on what's happening in the world. Also to keep everything socially relevant. From that perspective, I'm going to try and take you through some of the developments over the past month to hopefully give you some new insights, but also to share some thoughts about what this could actually mean and what you could do with it. So as you might know, if you read our global fintech newsletter that we send out every Friday afternoon, we basically have 4 categories or actually 5 categories we always publish in there. Starting with news, we always look at the investments, which is the second category. The third category is about research reports that have been issued. Categories about analysis and opinion pieces. A lot of blog pieces go out there about opinion leaders to tell that basically share their vision. And the fifth part, not to forget, is of course the upcoming events, which are worth keeping an eye out for. So I'll take you through, in any case, the first 3 categories because they're the easiest ones to actually derive a summary from. And for the rest, of course, if you're interested in this, I would definitely recommend you to read it on a weekly basis. So with regard to news, we see that blockchain has really gained some new momentum with Temasek, DBS, and JP Morgan collaborating to launch a new blockchain-based global payment platform. I think it's really interesting to see that we've seen actually over the past years that different parties have tried to look at the fundamentals of payments, which are to a large extent still built on correspondent banking, which means that basically every money that goes from A to B across the world goes from bank to bank to bank before it actually lands into the account of the person that's looking for the money. And so quite some parties are still keen on trying to create some more direct lines between parties. And blockchain seems to be a potential solution for that. Also, Bitcoin has been used for that. There are different solutions on Ethereum that are trying to do that. But so far, none of them have really broken through and, for example, made life hard for the payment rails as they are in place, like Swift, for example. But it is still really interesting to see that quite some parties are interested in actually investing in this, in new experiments to figure out if they could actually circumvent the traditional players. Another interesting news is UiPath. They had a very successful market debut on the stock market. One of the 3 largest US IPOs in software. Quite interesting. We've seen, of course, over the past months that there were a lot of IPOs, on some of them direct, some of them via special purpose acquisition companies, SPACs. But let's say the sentiment has been really great. I think definitely up until April about where the tech market would be heading. It's quite interesting to see, especially this week, we've seen for the first time that the doubt is becoming a bit stronger, that the market might be overpriced, and that all the large valuations that we see in the tech companies might be inflated somewhat. So we've seen already a correction this week of about 5% in some of the stock markets, and I think we could be going in for a bumpy ride over the coming period. Nonetheless, I think it's still good to see that there's a relatively high appetite for tech stocks on the public markets, which I think make it throughout the whole financial value chain really appealing to raise money. So also for VCs, it's a really good sign that there are large IPOs going on, because that means there's a potential exit at the end of the line. And I think you see that there's just more appetite for tech. And that's also something we actually see at the Amsterdam market, both at the Euronext as well as all the alternative markets that actually have come to Amsterdam after Brexit. It's a really strong appetite for tech as well, which makes it really appealing. That's why, funny enough, actually until the 1st January, the Amsterdam index, the AEX, basically was more dependent on the Dow Jones index, while actually after the 1st of January, it's actually more having a stronger relationship with the NASDAQ. So it's just funny to see actually also how sort of the nature of the market is very slow. So this is basically just some observation from the sideline. Interesting as well that PayPal is moving deeper into China. We actually recently saw that they actually moved out of India. So the fact that they are now more actively focusing on China makes it, in any case, seem that China is really opening up. And I think that's quite an interesting play. I'm curious to see what, let's say we don't know exactly the details on how they're going to move forward and what the regulatory environment looks like. But it does seem like China is actually, on one hand, becoming more strict on local champions to actually provide them with a similar regulatory framework as a lot of global companies have, and at the same time really trying to actively open up the market for foreign players. That's very funny, actually, if you look at the same time that the voices in US and Europe, for example, are really strong in actually closing out Chinese tech players from, for example, critical infrastructure. Turkey is very strong, really looking into crypto to actually make it more appealing. So they did see that they have to basically take action after 2 major cryptocurrency exchanges went bust. They had to step in and create proper regulation to avoid these kind of disasters. But you see that they also tried to take the opportunity to not per se create a negative environment for cryptocurrencies. So they do see a potential there. Quite interesting, I think. In EU, I think basically if you ask anyone in tech what their biggest challenge is, it might actually be the whole discussion about privacy. You see that the whole atmosphere about what privacy means and how we should deal with it in the tech world is still being shaped. GDPR is relatively fresh still, and also there we already begin to be improved if we look at the way the regulation and also trying to actually be more trying to assess what the impact has been of the current regulation and trying to look more forward. And they are actually now looking at facial recognition and believe that might be better if it's banned rather than being stimulated. It's quite interesting to see, I think, how this could happen. I think one of the drivers behind this as well is, I think, also the facial recognition technology that has been used in China a lot to follow people and connect any digital information you have with actually the physical presence of people. And I think that's where Europe is also really hesitant to facilitate that through their privacy. But it could have an impact on like a bank in the Dutch market actually also has used that. But it's an interesting way to actually make it really easy to pay without taking anything with you, which of course is really appealing. I mean, I'm a runner, so I tend to be out there somewhere without having anything on me that can actually identify me. So being able to pay with your palm could be interesting there. But then again, especially there now, you see with these technologies becoming more popular, we might again go into a similar discussion as with facial recognition, that they might pose some threats for privacy and security as well. So that's probably what we have to look out for. Well, there's been some earlier assessments on the impact of Brexit, but now we see that the UK has lost £900 billion in bank assets as the 430 firms basically set up at least part of their business in Europe. I think not all of them actually moved everything, but a lot of them basically made, let's say, stored a lot of capital within the European Union, given the fact that Brexit was coming up. And especially now, since the capital markets have actually also shifted their attention towards the mainland of Europe to a large extent, with trading in Amsterdam now larger than in London, you can imagine also that capital is moving in that direction as well. Sustainability, of course, is a really big topic, and I think it's really great that increasingly that's on the agenda of fintech players as well. I mean, everyone's trying to improve the world from a financial life perspective, but you see that from a customer perspective, you can't get around sustainability anymore. And the move by Adyen, I think, is a really nice to see as well. By the way, today that they announced that they will be doing an offset option for any kind of checkout, which I think is an interesting one as well. This news actually is about Afterpay teaming up with them to offer installment payments. So basically, also Adyen is jumping on the buy now, pay later bandwagon, which is highly popular, but also debated across many places, because it's the fact that you can actually relatively easily get credit, which is harder to have an overview from, basically, if it's tied into different platforms with different buy now, pay later transactions. There is a big worry for people that they might incline towards over-indebting. So that's definitely something to keep an eye out for. At the same time, that customers want it, and in some cases, it is the right solution for customers to be able to buy something they need, which otherwise would not be available. The first quarter has definitely also been has the attention of Clubhouse. So Clubhouse is a really popular audio app that came from Silicon Valley, where really the tech people would come together in an audio-only setting to discuss all kinds of things with each other and basically have open conversations where people could join. It has become really popular for everyone in the tech world. So if you haven't checked it out, I would definitely recommend you listen in at some point, because it basically gives a bit of a different environment than we've seen from the video-based platforms so far. And so from that perspective, it's not really your typical social media as you would see it. It's more a social kind of radio, I would say, where you could really interact with what's going on, which I think is really an appealing proposition. And so they're actually adding a financial model to what they do, which comes down to now basically letting the users send money to speakers. Quite interesting model, I think. And Stripe is basically very often in play if you talk about tech companies having to make payments. I think that's where Adyen and Stripe are basically in a fierce competition on trying to get the cool companies on their payment platform. Another thing for cryptocurrency is quite interesting. I won't talk about all the crazy moves that Elon Musk did last month to either boom or bust any kind of cryptocurrency. But what is quite serious is that Visa is really taking serious steps to accept cryptocurrency and to cryptocurrency as well. So it's from that perspective, I think it's quite early on that they, as an incumbent player, really take serious steps to facilitate cryptocurrency as means of either payment or store of value that you could use for payment. And then lastly, WhatsApp Pay had quite a rough ride in Brazil, where they wanted to launch already a very long time ago. They actually were live. Then they were basically kicked out by the regulators for all kinds of kind of fuzzy stories. But they've actually got a green light now again to relaunch. And it's quite interesting. WhatsApp Pay has been launched in a couple of larger markets like India and Brazil. We haven't seen much of it in Europe, but I think it's really interesting when they come here what will happen, because it definitely seems like it's a really easygoing payment environment that will draw the attention and of a lot of consumers. So that's it for the news section. Then just a really brief overview of investments across fintech space. We have one odd one here on the top, which is the Shenzhen Rural Commercial Bank, which was got an investment from DBS. We just put it here because it's interesting to actually see that, again, money is moving into the Chinese market, which I think is appealing. From the real tech companies, we see that SaltPay is actually the biggest one, but also not really clear who the investors are. But it's quite interesting to see how this payment firm is on the rise. The other ones worth noting are Brex, Plate, also big in Amsterdam, and Paxos. So how does that compare to the European landscape? There, of course, SaltPay, based in London, is again on the list. Others are Alan, Blockchain, Sales Technology, and Bucks. And the latter one, of course, we will also find on the Dutch market, where we've got 3 funding rounds to report over April, with Bucks with 72 million definitely standing out, doing really well. The founder, Nick, actually stepped down as CEO and handed over to the CCO now. So it's quite interesting as well how they basically switched places in. But it looks like with this support, they could really be a big one if you're talking about the investment space in Europe. So it's interesting to see how that's developing. And besides that, we've seen Savinio, I should say. You might have known about them before as invoice sharing. Quite a cool company, doing very well, and I'm really happy for them as well. And we've got a small round there from angel investors for Turf, a student admin tool to actually keep up with your spending within a small household. Interesting to see these kind of investments. Would you want to know more about our investment landscape and to see what happened in April? Please check out this link. You can find the European FinTech fundings from April in a nice infographic on our website. And there you could also see graphs like these that tell you where the money went and per country and per segment. So I've just 2 more slides for you just to give you a bit of a hint on what happened, especially on the research side. There's a couple of things we found interesting. The one is from CB Insights, is where US banks are investing in fintech. We see that very often banks are not just collaborating with fintech players, but they actually very often like to make an investment to be strategically attached to some of these companies, either to learn or to, in the end, make the full acquisition, or just to, have their bet in the market because they believe that some parties are going to be big and have some influence on it. Capital markets, there you see that that's actually really hot these days, as well as wealth management and asset management. The SME segment is basically after that, and blockchain and crypto following that, then payments, lending, real estate, and so on. So I think it's quite interesting to see how big the capital markets are. And this is also what we very often don't see, because what you do see is that capital markets are often too complex for people to write about. So if you read mainstream media, you might miss out on a lot of these deals. Another interesting one was the Forbes FinTech 50. They also basically looked at the funding of these companies. And the FinTech 50 from their end is about the most innovative companies. I think we've seen quite some nice familiar names there. Lemonade into Amsterdam for their European office. Quite nice to see them there. And these are all quite familiar names that I think you should definitely know. So if you just want to have a good idea on what the names of the players are that are out there in the market, this report that you can find on our website is definitely worth checking out. And then the last one, I think one of the themes we, for example, also discussed during Amsterdam FinTech Week from 4 to 11 July is fighting financial crime. And so from that perspective, always stats that tell us how financial crime is actually doing is quite interesting. And there you see now that, for example, e-commerce fraud losses in 2021 amounted to $20 billion, which is a very big raise of almost 20%. And I think, it's quite interesting to see how large that part is moving up. And it definitely asks for better solutions. And very often, e-commerce parties are also looking at their financial partners to help them solve this issue. So this is a really big market to provide solutions for and come up. And that's actually also what we're going to talk about today further in the breakout session. So I won't keep you much longer. I hope you enjoyed this brief overview and some insights. And I would definitely recommend you to sign up for the newsletter that you can find on our website to stay up to date on everything I've been talking about on a weekly basis. Thanks, and keep it up.
Thanks, Don. Thanks for the insights as usual. And so as Don mentioned, now it is time to divide into the breakout sessions. Just a few words about that. You'll be able to browse the different sessions on the left-hand side of the screen. You can see that right now, and then to go in the sessions, you should click on the session button, and you'll be able to choose the session you prefer. And keep in mind that the decision you make is not final. So if midway through a session you'd like to browse to another one, this is also possible. You can do so freely. So without further ado, I suggest we go into the main section of the event, and I'll see you all in the Regtech and Cyber session. And good luck to everyone.
Right, Marianne, I would say share your slides and take it away.
Sounds good. Thank you, Don.
For everyone who wants to have any, if anyone has any questions, please type them in the chat. I'm happy to try and see if I can get Marianne to answer them after that.
Perfect. Just to make sure that you can see my screen.
Yes.
Perfect. Perfect. Thank you kindly. I'm very glad to be here. Very glad to open this session. Let me start now. My name is Marian Tarnowski, co-founder of CyanReef, and our mission is to enable people to invest their money with positive purpose. I want to tell you that I met my co-founder, Vlad. We were teaching an asset management course, and over we've observed a very troubling trend. Young people are in a dire financial situation. In fact, 1/3 of the millennials do not have 1,000 euros on their account to cover an immediate expense. And if this trend continues, the current generation will face a very troubling financial future. What is worse, on a more systematic level, our economies must transition towards more sustainability. And this is not an option, but a crucial requirement for the coming decades. And we as a global community have already started to face the consequences of our actions or inactions. But the good news and very inspiring news is that young people are willing and eager to invest their money for positive purpose. Unfortunately, young people don't have access, tools, or guidance to do this right. This is a digital advisor. We enable users to invest their money for positive difference. Here is how it works. Users open an account with us, they specify their goals and values, and our platform automatically manages their investments for them, just like a private asset manager. Our users get a unique opportunity to select and participate in drivers of future economies, including climate change, diversity and inclusion, new exciting technology themes, and many, many others. We give our users confidence, guidance, planning, and budgeting tool for them to have peace in mind that their financial. With our platform, it's very easy to track your investment performance and the impact of your portfolio. It's very easy to reinvest and harvest your money. Anyone can open an account with us, starting from just 200 euros. Of course, we apply best practices in asset management grounded in Nobel Prize-winning concepts on portfolio optimization. We carefully and thoroughly screen our investments for impact sustainability. In fact, I'm very glad to tell you that impact investing has been doing very well on the market. It has potential to outperform the markets by significant margin. And we created this company because we see how this trend will continue. We are a team of fintech entrepreneurs. We create a fresh new legacy for positive finance, and currently we see a large market gap for distribution in retail financial services. But we know the market well. In fact, for the past 20 years, we've been designing new financial products, advising funds, and leading academic research in the financial domain globally. In terms of traction, currently we are running a finance platform to spread awareness on the sustainable finance and impact investing. Recently, we opened an investment club, consolidating and subscribing early assets under management from our networks, friends, and family. In fact, we received an offer to deliver sort of solution from a major commercial bank in Hong Kong, but we decided that this opportunity is better captured by ourselves as a greenfield organic initiative. And at this stage, we are ready to press the button, go to the market. The infrastructure is ready. We would like to partner with those who share our mission of spreading positive finance and impact investing with CyanReef. And one more, we are facing a major impeding pension reform in Europe. This is a game changer in asset management industry. Soon enough, personal investing tools won't be just nice to have. They will be a must-have feature. And when the change hits, we at CyanReef want to be there, serving our customers, bringing them peace in mind that their assets are managed long-term, responsibly, with positive profit and positive impact. Thank you.
Thank you, Marian. Well done. I think a really interesting proposition. I think it definitely fits very well with the current drive towards sustainability, as I also mentioned before. How did you see the market changing now, and do you see that there's increasingly an appetite now for people to really look for sustainable investments? And how do you measure the appetite for that?
This is an excellent observation, Don. My perspective on this is that the growth and demand for positive finance, for impact investing, is really observed both from bottom up, but from the top down as well. Let me specify, top down, we see amazing initiatives in regulation by European and on the local levels to systematize and regulate the impact and ESG investing. We are one of the companies following very closely the recent innovation on the regulatory domain. Really makes our lives so much easier in screening, eliminating greenwashing and such. Well, in terms of bottom-up demand, we observe that young people are willing to take initiative in their own hands, and we as a company are ready to assist them in doing so and help them bring the positive change.
So they could all become their next Greta Thunberg, basically.
Yes, exactly so. But this being said, if I may, we are not seeking to become an activist-based investment service. We are grounded in best practices in long-term asset management and wealth creation. So your assets takes priority.
Yeah. No, I think that's really understandable, and I think that's always a careful trade-off on what your purpose is, and if that's financial return is the key, then it's good to have that focus. Matthew is asking a question in the Q&A's part on the right-hand side. What's your source of ESG data?
That's an excellent question. Of course, we are relying partly on mandate of the financial asset provider. We are sourcing public sources. We are indeed partnering with third-party data providers. This is a bit of a sensitive data. These sorts of solutions are very expensive. As you know, I'm willing to take this discussion further when we can.
Okay. And another question by Matthew is, what's the investment experience of the principals of CyanReef?
That's a very good point. I can talk of myself. My investing experience is not groundbreaking, 5 years of equity investing. Now, the initiative, the asset management aspect of our initiative is led by Dr. Vlado Kisucki. He was there on global financial markets for the past 20 years. He managed large flows of funds. He is an expert in private equity. For a while, he was a top globally cited academic author in SME financing. So asset management part is properly covered.
Okay, nice. What I'm curious about is you said that you're ready to go to the market. What are the next steps? What can we expect to see from you?
That's an excellent question. An immediate task on our agenda would be seeking out synergistic partnerships to support founders' cash and market launch. We understand the importance of an impactful market launch. We need to make a big marketing campaign. We need to spread the idea of our mission, and this all takes lots of effort, lots of energy. In theory, we can go by ourselves, but we don't underestimate the potential and the strength of good relationships.
Exactly. I can fully understand that. We got one more question here from Dennis. You mentioned people don't have money to invest and are vulnerable because they cannot absorb financial losses. Yet this is the group most likely to invest with purpose. How do you deal with this? It's indeed a bit of a dilemma that people that might want to follow your lead might not be the most wealthy ones to aim for.
That's an excellent question, and this question actually stood at the ground zero of how we were brainstorming the best solution to capture this opportunity. We know that young people are currently overlooked by the wealth managers, by asset management industry. As when we observe the minimum tickets to invest for a private banker, for an asset manager, it starts with 100K, frequently 250K and more. Yeah, we are interested in capturing users with zero in their accounts, and then foster positive saving habits, showing their financial path. And these users have an immense cumulative portfolio potential for us to capture. That being said, we don't overlook other user segments. We find that our idea resonates strongly with users seeking to invest for their pension funds, looking into that, and we are talking about larger ticket sizes, of course. That's a very large discussion. I would be able to talk about this for hours and hours. Very curious to keep this discussion going.
Yeah, great. Thanks, Marianne. I think well done on your pitch and answering all the questions. I would like to go to our next pitch, but not before I ask you to actually go to the polls section on the right-hand side. How CyanReef did. You might actually also get some other questions from us and that's all about understanding a bit your feedback and being able to get better at what we do here. Edwin, thank you for joining.
Hello, how's everyone? Thank you for having me here. Can you listen to me?
Can you try again? I don't think we hear you very well.
Can you listen to me?
The sound is really low in volume for me.
Hold on, sorry, I had a big day with the computer.
I can barely hear you.
Let me see how I can solve it. 1 second, please.
Oh, it seems like it's getting a little bit better. Do you have like a microphone or anything that you can use there?
Yeah, I'm actually not even using my computer because it broke down this morning. It's Murphy's Law today for me.
Okay. I think now I can understand you good enough, I think. So
yep.
We have to listen carefully, but
I'm sorry about that.
Give you the floor, and probably if you're on a roll, we'll find our way.
Perfect. Let me share my screen. So can you listen to me?
Hey.
All right, let's begin. So thank you for having me here. I'm the CEO and co-founder with Brickken. I'm surrounded by amazing co-founders, as well as just trying to understand what is happening behind the issuance of a token. So when we say we want to open new markets to the world, we actually mean it. We bring in opportunities. So for these 5 minutes, I am going to transfer you to the thought that there's an opportunity behind what is a token. Regarding that, our vision is quite clear. We want to see, or we want to help companies to create communities. Either it can be a finance scheme, it can be an engagement channel, it can be everything. So what we're trying to say is the token itself is just bringing opportunities, and the opportunities can be for B2B or it can be to B2C. because what we want to say is it's a new financing scheme. It's a new way to engage with your clients, with your fans, with whatever channel you want to engage with. And in this matter, we have created an opportunity that it's based on the dashboard, it's based on the mobile, and our greatest asset, which is the API. We can actually connect our technology to third-party platforms, to third-party technologies, to third-party websites. Because like I started beginning, we're bringing opportunities to the market. And that's the most important asset that we have in Brickken. We are selling opportunities, we're selling dreams, we're selling chances, we're selling everything that the market needs itself right now. And with a sole provider, you can have a wide array of chances. So you can issue security tokens, which is a finance scheme. All European member states have the legalization, how you can issue security tokens. You have utility tokens, which can be transferred into services or products. And then you have the NFTs, which is making a big breakthrough this year, you know, kind of like one ownership, one transfer, one saying like I am the owner of those things. So in one company with Brickken, you can have all these three arrays and start selling those opportunities. Security tokens are basically securities. There's nothing new behind that, except the fact that now it is based on a token. Sorry. I'm just gonna jump ahead and say like, sorry guys, this is not my computer. It's just I had a really weird morning with all these things happening.
No worries.
But either way,
Edwin, take it easy. Just focus on the things you really want us to know about you.
What I want the market to know is that Brickken is just an enabler. That's the main fact. We can bring any kind of token, being a finance scheme, being an opportunity so you can engage with other people. At the end, what we're trying to say is that the token itself has a lot of value in the back. You know, kind of like the mentality behind people is changing on an everyday. People are not caring anymore about if they can have an asset that it's real and it's palpable and it's fungible. They're thinking about digital. So in this kind of sense, the opportunities are immense. Why? Because there's just a mentality behind people, what they want to say and own has completely changed. And that's the token. People want to own tokens because it represents property, it represents opportunity, it represents valuable, it represents community. And that's where we want to go ahead and say to the companies or to anybody is like, let's create a token and let's create an opportunity. Let's create that engagement channel. Let's create all of these opportunities in the back. So basically, that's what Brickken it is. And that's what we're trying to build. Is it hard? Of course it is hard. We're early adopters of a new technology, of a new paradigm change. We're definitely there. Do we have traction? Of course we have traction. We have clients already on board. We have actually we just onboarded a city hall in Barcelona, and all of these things are just telling us that there's an opportunity out there. So if you want to have this chance or risk and say like, what is the token? What is all of these things? I mean, Brickken is the choice. Why is that? Because we have all the legality. We understand the market. We live off chain and we live on chain. We're the intermediary. We understand both worlds.
It looked, if I just looked at the glimpse, that his device went down. So I'm not sure we're going to see him very soon again. So I don't think we should wait for Edwin at the moment, but hopefully he's able to find his way back into the session. And then, of course, we'll grant him some time to further elaborate and answer some questions. Apologies for that, but it looked like it was a battery situation. Pretty tough one. Let's look at, let's maybe first go to the pitch of NaaS, so we could actually listen to them and start with their pitch and Q&A, and then we'll follow up later with Brickken and see what else they have to say. Please go ahead, share your screen, and get your pitch started.
Sure, thank you. Yeah, let's see if it's working. It is. Perfect. So hello, my name is Dwight Komproe. I'm the head of marketing and communication at Viventor. Normally, this pitch is presented by our CEO, Egle. Unfortunately, due to personal reasons, she isn't able to be here. So I'll try my best to. Oh, that started automatically. I'll try my best to inform you about Viventor and this pitch. So Viventor is an alternative investment marketplace. This is a marketplace where investors and non-banking lenders are able to meet and interact with each other. We've been in business for a while now. We've been in business for 5 years. We have over 7K active investors, and we disbursed 135 million worth of loans. Viventor it's important to see Viventor as a platform for investors and non-banking lenders. So therefore, we try to tackle problems specifically for investors and also for non-banking lenders. The problems for investors, which most people will realize and also experience, that it's a low. The investments have low returns on the most classic returns, and that is something that we try to do. Oh, sorry, my presentation is going really fast. A moment. Oh wait, can I stop the? Well, let's. I hope it doesn't start playing automatically. It is. Oh, well. Let's do it like this. Then I know for sure that I have control over it. So yeah, the problem for investors is that they get low return on traditional asset classes, and we are trying to provide them with different options and solutions. And for non-banking lenders, depending on the situation and their financial situation, it could be difficult to get funding. So in this case, we try to offer the solution to investors with new and better investment possibilities with high returns. Our yearly return rate is average around 13.6%, which is immensely, obviously. And for non-banking lenders, we serve as an alternative funding source, which translates to business able to for a business able to be to scale up and grow even further. In investors, they want to invest obviously relatively fast, and therefore we have an onboarding system with a face recognition that is able to onboard investors in 5 minutes. We also understand that investments it has risks with them, and therefore we try to use or we provide or offer an auto invest opportunity, which will spread the funds across multiple loans, and therefore the risk is obviously also spread. For non-banking lenders, it's really important that obviously they get funds, or they're in business with borrowers. They have specific moments when they need funds to obviously lend to borrowers. On our platform, they're able to list loans, and they will receive, when investors invest into those loans, they will receive those fundings within a week, which is traditionally faster than any bank. And is alternative investing a risky business? Some of our loan originators experienced some difficulties during COVID, which is to a certain degree normal. They had problems repaying loans. This is something that we are basically more or less solving. We are expecting growth to return this year. We also, this last year, made us aware of how important it is to manage risks. So we adjusted our risk scoring model, and we are collateralizing assets to lower the overall risks for investors. As our CEO Egle would say, this is a golden age for alternative investments. The loan supply availability is on the rise for 3 million euros, which is a good opportunity for most investors, at least if you have some funds and you want a decent return, or in our case, a high return on your investments. And I'll tell you now how that works on our platform. So we have the non-banking lenders on the right. They get a request from borrowers for some kind of funds. They list the loan on our platform, on the Viventor platform. Investors are able to invest in these loans, and they obviously through the auto invest possibility, they're able to choose in which loans they want to invest. These funds are sent to the non-banking lenders within a week. When the borrower repays the non-banking lenders, the investors will receive their investments back, and obviously with some kind of interest, which is around 13.6 annually. Since 2020, Viventor has been part of the Gielen Group, which is a Dutch fintech investor. Collectively, we have over 30 years of experience in the financial market. Our CEO is a controller and financial expert for the last 8 years. Together, we believe that we have a good balance of IT, marketing, hopefully in my case, and just a financial experience to make this a success. In the since 2015, so the last 5-6 years, we raised over 1.5 million in seed capital. We used that capital to develop the platform and also optimize the marketplace. To grow even further, we're looking for additional 1 million euros. That is to obtain the financial broker European license. We want to implement new types of products and expand to new markets, especially in markets into Western Europe, where we have over 60% of our investors. If you have any questions, which I can imagine, this is the first time me presenting this pitch, even though I kind of built this pitch together with Egle, but still, it's interesting to present this. You can obviously ask me questions. I'll do my best to answer them. My experience in the financial background and the complete understanding of Viventor is relatively low, since I've been working here for a year almost. But if you have questions, you can obviously contact Egle, and I'll try my best to answer any questions you have.
Great, Dwight. Thank you very much for your pitch, and well done. Let's see if we're getting in some questions from the audience. One of the questions here is that from Matthew, that says, how does your business model differ from, say, LendingTree? Could you elaborate on that a little bit?
Like down to the basic, probably not that much. The main thing that we try to be different in is the loan originators. Like the peer-to-peer market is not that new, and not anymore at least. But the thing that we try to do different is our loan originators, the risk scoring model that we try to keep up to date and implement, so that we try to lower the risk as much as possible for investors. And our auto invest portfolio that's able to spread the funds of investors into different kinds of loans, which works for over the last 5 years correctly, and that should be more or less the difference.
Cool. Thanks. Where are you going to apply for an EMI license? Is Julius, who I know is based in Lithuania, so he might have a certain idea about where you could do that.
Yeah, we are like the Viventor is officially located in Latvia, but we are spread across the entire world. So the CEO lives in Lithuania, and I'm in the Netherlands, in The Hague, and we have like a financial advisor who lives and works from Luxembourg. But the European broker license should be or is being requested in Lithuania.
Okay, good to know. And so, what do you think are the biggest steps you still need to take for further adoption, right? So I think it's a two-sided market to a large extent. So where do you feel that the biggest bottleneck is, and what's your strategy to tackle that?
One thing is that we should manage the expectations of investors, at least get them up to date on what it means to be an investor, which is obviously not just for us, but also for them. And also for loan originators and non-banking lenders, we've seen a few that have been trying to scale really hard, which when times are going well, that is excellent, perfect. But when times are not so good, that you could run into some problems. And we will try to manage that a little bit better. So obviously we do not try to stunt growth of other companies, but there should obviously, it should be some kind of responsibility, and obviously some kind of nuance, right? Because when the interest in some cases is around 16%, there should be a little bit more risk compared to 8%. But those are two things on the side of investors and on the non-banking lenders that we're trying to tackle.
Yeah, cool. Clear story, I think. So, is there anything you need at the moment? What does Viventor needs for the next step? Is there anything the audience perhaps could help you with?
Well, I'm really curious on the onboarding process of, for example, Greek investors. We are trying to be like the good kid in class, and therefore we try to follow the AML regulations strictly. And we see a lot of Greek investors with paper IDs and also a few from Italy, which are relatively easy to have a fraudulent passport or ID card with. And it's yeah, that is one thing that I would like to deal, like some kind of solution. I don't know if there is a solution, but that would be really nice. And also contacts with loan originators in more or less in West of Europe, because I have to find these people and companies manually. That would be a really big help.
Yeah. Okay. Great. I think that these might definitely be in the audience, or at least we probably know our way to find them. So thanks, White. I think that's a really clear story. So let's wrap it up with this. Let's of course also not forget to rate the Viventor pitch. You can do that in the poll section. So thanks again, White, for that. And it's good that we saw that Francesco was actually available. Great, Francesco, that you could join.
Hello, Don. Can you hear me well? Yeah.
Yes, I can hear you well. We then are going to listen to you for your pitch about NaaS. Are you ready to share your screen?
I'm sharing it right now. Can you see it, Don?
It's coming up.
Okay.
Yes, I see it.
Perfect.
Take it away,
So
I
I
would
should
say.
start?
Yes.
Thank you.
Go ahead.
Hello, everyone. This is Francisco Cordova from NaaS. At NaaS, we are closing the finance gap in Latin America, and I want to tell you how we can do that. There's a big problem, and there are more than 30 million companies in Latin America who lack access to funding. That means that those companies don't have access to the working capital that could allow them to really grow. So if you analyze the status quo, you find that banks find it difficult and expensive to reach small companies. And one of the reasons is the index score that they use, because the current index score provided by the traditional companies is optimized only for big companies. And another problem that financial institutions suffer is that they have insufficient or ability. So they cannot really make great assessments. So what is our solution? NaaS is an to access credit risk in real time using third-party data. How we do it? Well, the key thing is technology, as in the website, also in a mobile. Let me give you an example. Credito, which is one of our customers, is being used the website of them with our technology. So small companies are applying for funding through their platform. What is going on there is applies online, then with our API, we analyze the risk, and then we recommend where they have to lend. The past months, we have received more than $10 million in transactions and in loan requests using the web. But also you can use a mobile. And let me give you a use case. So if you have a grocery store, you can have your own mobile app, and then you can integrate our API. What our API access to their, it will combine with other types of data, such as the information from the cell phone, and then we can do an analysis in real time and then tell you, okay, you can lend this amount of money to this user. So as you have seen with our technology, you can adapt it to different types of opportunities. One key thing is that the unique selling point that we have an open API that allows us to connect to ERP, CRM, and other software tools so we can extract data process. Second thing, we can customize this for you. So the API and the index code that we create will depend on your requirements. It's not what we think, but we can think together. And the third element is that we use artificial intelligence to enhance the process. So with the correct amount of data, using customization and utilizing artificial intelligence, we can really go more than any other company. Just let me show you how it works. Let's say your customer is requesting a loan. It could be in your mobile app or in your website. It doesn't matter what type of customer. It could be a retailer as well. Second, the information of that app is analyzed with our API. And then we determine what is the risk level, and we said if we approve or deny a loan. And then we send the information back to you in a couple of minutes, and we'll tell you, yes, you can to this person. So it's a very easy process that we have. It's a pay as you go. So we have a monthly fee and a fee per transaction, which will depend on API request or the size of the loans. Also, if we compare with others like the Big Experian or TransUnion, we have an open API, we offer customizations, and we use artificial. Our team has tremendous experience. Computer science engineer developing scalable system with Edgar and Joanna that process more than 700,000 transactions per year. And we also have 4 computer science engineers, a credit analyst, and a data scientist. Our advisors come from different types of expertise, from big companies to banks and other financial institutions. The market is immense, is $1.5 trillion in Latin America who lack access to credit. Looking is that we can really transform the lives. When you can join us, we can close that finance gap and change millions of lives. So thank you very much, guys.
Thank you very much, Francisco. Well done. Great to get your pitch here, and I think it's a great story that you got outstanding there. Funnily enough, I've actually been was this morning having a conversation with DirectID, a Scottish-based also risk scoring company that also uses API, basically financial data, to create a risk profile. So for anyone who wants to listen in, also that's one perhaps to look into a market scan. I'm curious also how you work with what kind of parties you mostly work with at the moment. So do you see it especially, is it like physical store retailers, or also, are you also looking into the online market especially?
Yeah, we are working with both. We have retailers that have requested us the technology so they can lean in an easier way, but also financial institutions that really want to optimize their credit scoring for small and medium enterprises.
And so do you take care of the whole lending scoring model, or are you a data provider, or are you a credit process facilitator, basically?
We are a credit process facilitator. We take information from different sources of data. We prefer to work with CRMs, ERPs, and other software because in Latin America, we lack open banking. Imagine what we can do if we have it.
Mm-hmm. Yeah, no, that sounds great. And opportunity for people to actually work with credit scoring to be able to get access to credit. Is there basically in the Latin American market, do you see also the problem with thin files on credits? Is that an issue? That people that did not get a credit before, that they have a tough time getting access to credit?
Yes, actually, one of the key things is not only to use the traditional credit scoring system, which we can have access if you request it, but also how we can help our customers to build their own credit scores and help their own users to increase their possibilities of getting loans.
All right. Yeah. And so how are the credits in the end funded? Can you tell me a bit about how that works?
Yeah, so each company that we work, they should have their own funding and their own money. What we handle is all the data processes, the API, we use the artificial intelligence, but there are the ones that have to find the funding, and we do the recommendations of how much they have to find, and also importantly, what is the risk level on each loan.
Okay. Yeah. Actually, if you have data across parties, that you could pull that at the level of the investor, who actually then has a standard view of what risk they run at these kind of portfolios, right? So interesting
Exactly.
opportunity as well.
So we can also enhance a bank operation because bank has many information about their users, and with our API, we can use it much better and give better recommendations if they want to launch new business units.
Yeah. So we got two questions also from the audience. Guru Prasad asks, what are the regulatory risks that NaaS faces in Colombia?
Yeah, we don't face any risk because what we do is just a recommendation. We don't need any license. We work with companies that have the license.
Yeah, exactly. They need to have their own license, and you're just there. Yeah, clear story. Thanks. And Dennis asks, do you also provide info to your clients to assess the quality of the credit score provided? And how do you gain their trust?
Exactly. One of the key things is that we tell them, let's start small, and then with the AI, we can start to generate more loans in the future. And each month, we will give a recommendation on how those loans are performing and how they can adjust their index score.
Yeah. All right. Sounds like a clear story. Thanks a lot, Francisco.
Thank you very much.
Everyone in the audience, please rate the pitch by NaaS here. And no, it doesn't seem to work out. So I think indeed we have to rely on direct connections. In the chat already, Yasir and Edwin reached out for everyone to reach out to them and have a conversation with them. So please directly connect to them to talk more about tokenization through the Brickken platform. Then we are actually up for the point that we should go for who the winner is of this pitch session. We do this every time when we have a meetup. We actually try to rate the best pitcher because we really want to stimulate people to make their best effort and give their best go at for the audience. And today, the winner of the pitches of this session on the investment section is by CyanReef. Congratulations. Very glad that you made it. You did a really good job. Let's see. Marian, are you still there?
Hello. Thank you, everyone.
Hi, Marian. Yeah. Well done.
Expected indeed. Can you hear me?
Yes.
Oh, well, I just observed how Francisco pitched his NaaS company, and I was quite amazed by that. Heads down for that, but thank you kindly for your ratings. And there is so much more to tell about CyanReef, about our mission. I'm glad to keep the discussion going in case you would be interested.
Now, clear. I think we're very happy to actually connect everyone who, let's say, you can actually connect, use the platform here. If you go to the list with people, you can actually click on people you want to connect to directly. Or you can actually afterwards go to the networking on the left-hand side where you actually get a random match with anyone that's participating today. Elizabeth, who the winners of the other sessions are, I'll check that out. And for the rest, so please try to connect to people directly here, because I think it would be nice if you want to talk to someone to let them know that you, should you in hindsight have missed someone or still would like to be connected, please reach out to the team at Holland FinTech, because we're more than happy to connect you should you not have the connections readily available. The winners of the other sessions, thanks for asking, Elizabeth, are Advanscreen and RealRate. So together with CyanReef, I think they did a great job at pitching in these different sessions. So really well done. Congratulations again, Marianne, for putting this up. But of course, also the other pitches. Regardless of some technical issues, I think you all did a great job in preparing for today. So well done. Looking forward to keep track of how you're evolving from here, and of course to support you along the way. From here on, it's actually time to almost start wrapping it up, but not before I actually tell you about Amsterdam FinTech Week. You might have seen it come by already. The program is coming together really nicely with some cool speakers, but also with the opportunity for all of you to not just listen in, but also help organize it. So it's a community week where everyone, it could be an event organizer, and we help with the technical part as well as the promotion of the event to make sure we get sufficient audience and can tell the story of everything that's going on in the Dutch market. Very much look forward to get you all on board there. Please reach out to our team as well should you have any questions. And the other events to list, of course, this is an interesting one. We got on June the 111th, we've got the next meetup. I think that's going to be the 11th. That is the last day of Amsterdam FinTech Week when we have our Meetup XL. And of course, keep track of the Flash Friday. That's a session we have every Friday morning for half an hour between where we're basically going to do a one-on-one interview with one of the players from the network and together explore what is happening behind the news. Besides that, another interesting session you should definitely be following if you enjoy discussions about privacy and follow where things are going there, is the personalization versus privacy session. How far can you go on May 20th? If you go to hollandfintech.com/events, that's where you can find not just these events, but also a lot of interesting third-party events that we've listed and curated for all of you. With that said, I would like to end the session here today and very much thank you for participating and being interactive. I really enjoyed having the session here, listening to the pitches. Looking forward to work with all the companies. Thanks, pitchers, for doing a great job. Thank you, everyone, for asking questions and participating. And I really nothing more to say than enjoy your weekend. See you next time. Goodbye.
Finally, we can kick it off. So welcome everybody in the Regtech and Cybersecurity session. If we can go to the next slide, I'd like to leave the word to Michael Lucassen for a brief introduction. He's a partner at TIIN Capital, and he'll be kicking off the Q&As after each presentation. So Michael, I'll leave the word to you.
Yeah, I think it's the intention that I'm only introduce myself, Gabriel, right? Yeah, okay. Well, I'm a managing partner at TIIN Capital. If you don't know it, well, we are already here since 1998, and we transformed over the years from a real angel investors club into an active and entrepreneurial VC. During the last, well, I should say 15 to 20 years, it was general tech, and we transformed since 2 years from a general tech into a VC house focused on cybersecurity and IoT security, bordering issues because privacy and security is more or less married last years, and therefore Regtech is close to what we are doing as well. So we started investing 2 years ago, focusing on IoT security, on cloud security, cybercrime, and GDPR issues. Have a few companies in Regtech, one of them focusing on as a financial crime fighter on money laundering solutions and transaction issues, and also bordering issues on the field of KYC. So it completely fits in this session, I would say. So that's the good news. I'm involved already, and I had my own fintech company, so that's perhaps interesting to know, which was an online asset management platform. So I had to do a lot with the Dutch Central Bank and AFM, so are quite familiar with issues like that. And well, I'm happy to see that there are 3 interesting pitches for the day, more or less, well, a bit competing with each other, I would say. And I'm interested to learn more about it and see what kind of interesting questions I can raise and what their answers will be, Gabriele.
Sounds great.
Sounds
great.
Yeah.
All right. Yeah. Thanks for the introduction, Michael. I think that's really clear. And yeah, looking forward to your questions. Before we move to the first pitch, I'd like to remind the audience that during the pitch and at the end of every pitch, you'll be able to ask questions as well to the pitchers. So if you'd like to do so, please write them in the chat box on the right-hand side of the screen, and I'll be able to ask them to the pitcher. Please keep in mind that there's 2 chat boxes, one for the whole event and one specific to the session. Please click on the one specific to the session, so I'll be able to ask the questions. Now, without further ado, if we can go to the next slide, I believe now it's time for the first pitch of today. This is a pitch from Privasee. They are a startup focused on helping businesses remain compliant with GDPR without excessive costs and easy processes. And to tell you more about this, today we have the CTO and co-founder of Privasee, Manuel Martinez Chamorro. So Manuel, whenever you're ready, I'd like to invite you to the stage. Here you are. And feel free to share your screen and start your presentation.
Brilliant. Hey guys, can you see me all right?
Yeah, we can see you.
Fantastic. What about my screen now?
Also, good luck.
Right. Thank you. Hi, I'm Manuel, co-founder of Privasee. Dan is woken up in the middle of the night. Millions of customer credit card details leak from an old database that should have been deleted years ago. Now, he could face a fine of up to 4% of annual turnover. And the worst part is that this could have all been avoided if he had paid better attention to his GDPR compliance. But Dan, like many SME owners, found the process confusing, expensive, and time-consuming. With the average SME spending 330 hours and 45,000 euros per year if using a consultant. The Privasee platform is a self-compliance tool that takes away the complexity of GDPR and makes it easy for SMEs to understand their data and mitigate its risks. With a 7-minute questionnaire about your business, our platform gives you a compliance score, an action plan with simple steps to mitigate risks, and an audit trail to easily demonstrate compliance for any requirement of the GDPR. So let's see the platform in action. As soon as you complete your questionnaire, you arrive onto your dashboard, where you can quickly get an overview of how well you're currently doing and how you've been improving over time. Now, if we wanted to improve our GDPR score, we could look at our action plan and see that the first thing that we need to do is to create a data map. A data map is an essential component of any GDPR exercise because it will allow us to identify risks and to provide a clear picture of what data we have, what we use it for, and who that data is about. Before, this would have involved days of meetings, Excel sheets, and expensive consultants, whereas now you can use our GDPR wizards to walk you through the process. As soon as we click on Start, the wizard will start by asking us what type of third parties and processors we use on a daily basis. So for example, at Privasee, that would be things like Slack, things like Typeform, or things like Xero. As soon as we click on Next, the platform automatically fills in information based on our answers. For example, finding types of information that is usually collected by Slack, what that information is usually used for, and who that information is about. Additionally, the platform will connect to platforms and third parties like Google Drive in order to find hidden information and make sure that in less than 10 minutes and without any external help, we can get an accurate data map that reflects our company. As soon as we click on Complete, we can say that we can set the data map as complete, and what we'll do is it will take all of this information, put it together, and update our score. So now our company has gone from a 58 to a 64, and that is reflected in the graph. Additionally, we can go to the requirements and we can see that all of the requirements of the GDPR regarding the data map have been updated so that we have an audit trail of who completed this requirement, when that happened, and how this process was done. As soon as we have a data map, we can start completing other requirements of the GDPR, such as having to reply to one of our customers asking us to delete some of their data and doing so in less than 30 days. Now we can quickly do that by going into the data map section, clicking on people, and automatically being able to see what is the type of information that we collect about our users and what the information is used about, making sure that we can give them a specific answer in the amount of time required. Something that Privasee also makes extremely easy is proving to a client or an investor that the data that they have given us is safe with us. In order to do that, what we do is we look at the storage location sections in which we have all of the different sub-processors in which we either store or send data to. What happens then is that Privasee will automatically look at these processes, for example, Google Drive, and will find key information such as their privacy policy, data processing agreement, or security measures, warning us if any of these pose a threat. Additionally, this gives us an added benefit, and that is that if there is ever a data breach in one of our processors, like for example Google Drive, we automatically have oversight over what is the potential scope of that breach, meaning what elements, what type of information might have been breached. And who is the people that information is about, making sure that we can notify the right people in the right moment. The nice thing about using Privasee is that at all times, you are always aware of how well am I currently doing, what are my risks, and what are the steps that I would need to take in order to mitigate those risks. That gives you complete control over what to do and when to do it. For example, we have now completed our data map, and that means that we have reached the next level in our compliance journey. And then we can choose to complete other requirements, such as appointing a representative for data protection in our company, registering with the supervisory authority, using Privasee's wizards in order to make sure that all the data that we use in our company is done so in a way which is legal, or using our automated tools to create a privacy policy that uses information fetched directly from your data map, and that automatically updates any time that the data map changes. These are just some of the ways in which your company can use Privasee to put GDPR on autopilot, making sure that you can focus on your business while always being able to demonstrate compliance. Get in touch with us to book a free GDPR checkup and get started. Thank you.
Thank you, Manuel. Thank you for the great presentation. And before we move on to the Q&A, I'd like to remind the audience to rate Manuel's pitch. And you can do so by going into the whole section on the right-hand side of the screen. And yeah, so now without further ado, we can kick off the Q&A. So I'll leave the word to Michael to ask the first question.
Yes, thanks, Manuel. It was a short but clear presentation. You are a platform, as you're saying. I'm trying to understand the last part of your pitch, but is the three that you mentioned, for instance, that I can link to a supervising authority? Do you mean that you are a platform giving me tools covering the complete GDPR process next to that you're doing a sort of continuous scanning?
Yeah, so what we've done is we have taken the GDPR and we have broken it down into specific requirements. Now, those requirements have a legal complexity that most people are not aware with. So that's why what we've done is we've taken those requirements and we have made an action plan such that anyone in our platform can recurrently go into the platform, complete the different steps, and by doing so, mitigate those risks. Okay.
And you're probably not on your own. There will be a team. How many people are involved at the moment in your business?
So we're currently 5 people. Myself and my co-founder, we're both technical. We're both developers from King's College London, with experience in companies like Deloitte, as well as building web applications in both fintech payments and other industries. Additionally, we have Diksha, one of our developers, which has experience in Goldman Sachs and Y Combinator, Unicorn. We also have our lead product developer, head of product, who has also experience working in Deloitte with their GDPR offerings, and of course our privacy analyst, which has been instrumental to developing our strategy around privacy, and who has an LLM and a master's in information security.
Okay. Yeah, and if you're talking about your solution, it's I understand the problem.
Mm-hmm.
If you look at your competition, do you make it? Are you better, or are you? Is it the difference that you have continuous scanning, or what would you say is your unique selling point compared to your competition?
Of course, we were better. So
Sure.
the key thing there is that the industry is still very, very old school, in the sense that a lot of the solutions that are out there, and we have experienced that ourselves as founders of an SME, trying to get around GDPR and being really confused about how the law applied to us, being very frustrated about how the only solutions we could find out there were consultants that would charge us around £1,000 a day, and even then not really understanding how, once that consultant left the office and went back home, how in a week's time or in a month's time we would be able to cope with future threats regarding GDPR. So in that sense, a lot of the solutions out there are still on a consultancy basis. And the few platforms that do exist are very much focused on the enterprise, so on big companies that have not only big budgets, but also big teams of lawyers and compliance analysts who can take on this work, which leaves literally 85% of all companies, which are those SMEs, really unserved and lacking that help that they need.
Okay, so you're more automating something which is now being done by consultants and a lot of expensive other people.
Yeah.
Talking about expensive, what is your pricing model? How do you earn money?
So our pricing model is a typical SaaS business. So we charge per subscription, so per every account. Right now our pricing is £100, so about 120 euros per month per user.
Okay. You have clients already, and then I will stop, Gabrielle, because
Yes, we do. We have 9 clients with 11 subscriptions. Most of those, we have companies in the fintech payment space. We have a company that is recently turned unicorn. We have a big partnership with a big UK education institution, as well as a number of NGOs working around COVID relief and payments.
Okay, great. Thanks a lot.
No worries. Thank you, Michael.
Okay.
Thanks, Michael. Thanks, Manu. Thanks for the insights, and thank you, Michael, for the questions. I think they were quite to the point and insightful. So thank you for that. And also, we don't have any questions from the audience at the moment, so I suggest we move to the next pitch of today. This is a pitch by Schwarzthal. Schwarzthal Tech is building an AI-driven platform providing the next generation in financial crime intelligence, and that really leaps from ahead of KYC and introducing an alternative forward-looking KYN, so know your network. To tell you more about, we have Marius Frunza from Schwarzthal. So Marius, whenever you're ready, feel free to share your screen and start your pitch.
Hello, everybody.
Hi.
Sharing my screen. Is everybody seeing it?
Yes, we can see it. Good luck.
Do you know what nemesis means? A righteous infliction of retribution, manifested by an appropriate agent, personified in this case by the CEO of a global financial institution. Why a bank's senior executive is personally held responsible for bank's previous wrongdoings in financial crime? Is he really guilty? Is maybe the bank's fault, or maybe that institution did not have the right tools to tackle financial crime? In reality, financial crime has become overly complex, and in every financial crime, there is never only one person, but an organized network of companies and individuals. Know your client, anti-money laundering are important, aren't they? I am polite, but in most banks, teams are underperforming, and penalties speak for themselves, and we are not looking even at the consequences of criminal behaviors. KYC today is not efficient. It generates a high number of false positive and false negative and is not capable to assess criminal networks. It will always fail, for example, to show whether a director was disqualified in another jurisdiction or if an investor is related to a sanctioned person. Our platform, Wunderschild, can show you these hidden connections before you onboard as criminals or flag problems as from your existing customers. Let's take a simple case. Invest Alliance BV, Dutch registered company known as also as Schilders Finance. The company operates for over 25 years, and if a bank performs a normal KYC, they will not find too many things. Nevertheless, when looking to its underlying network, things are different. The company has an anonym firm in London, controlled by Russian citizens. One former director appears in the Panama Papers, controlling a company in the British Virgin Islands, jointly with another person that owns multiple businesses in the Russian Federation. One of the previous directors controls companies in Estonia. Most important, Invest Alliance BV has also a subsidiary in Moscow, incorporated in the year 2000. The company has also a subsidiary in Kazakhstan, in the city of Almaty, incorporated in 2011. Subsidiaries in ex-Soviet republics, ties with Baltic countries, relationship in offshore jurisdiction, high complexity network. In the light of this analysis, Invest Alliance BV reunites all ingredients of a recipe for exposure to money laundering and sanction violations. I am Dr. Marius Frunza, CEO of Schwarzthal Tech, and I'm to tell you that our solution could have saved ING 900 million USD as paid penalties. That's a big claim, right? For years, the ING allegedly helped Russians and Ukrainian oligarchs move huge amounts of money out of ex-Soviet Union countries. Schilders Finance BV was one of ING clients. In 2014 alone, this company moved money for over $1 billion. In fact, Invest Alliance, aka Schilders Finance, was one of the companies that were at the origin of the suspicious activity of ING in relation with Russian money laundering. What our solution does that others don't. In this case, it gathers data about companies, directors, and beneficial owners from Dutch, British, Estonian, Russian, and Kazakh business registry. It extracts key information in several languages, English, Dutch, Russian, and Kazakh. It builds, visualizes, and analyzes the underlying global network of a counterparty. It aggregates the information in a quantitative risk score. Wunderschild is an AI-driven platform providing the next generation of financial crime intelligence. It is not KYC, it is KYN, Know Your Network. Know Your Network leaps ahead of KYC and introduces a dynamic, multidimensional, and forward-looking approach. Cutting-edge algorithms enable users to uncover connections you are not even looking at in relation with criminal networks and to perform in-depth assessment to better qualify and score risk. The platform encompasses over 200 million data points in both companies, individuals, sanctions, and adverse media worldwide in several languages. The advantage that our approach integrates screening, adverse media scanning, and also transaction monitoring. For more details about our product, please sign up on the platform. Dankjewel.
Thank you, Marius. Thanks for the presentation. I think it was really clear. Now, as usual, before we start the Q&A, I'd like to remind the audience to rate Marius's pitch on the right-hand side of the screen, and you'll be able to do so in the poll session. But in any case, now it's time to go to the Q&A. So as usual, I'd like to leave the word to Michael to kick it off.
Okay, thank you, Marius. Yeah, a few questions. So, what you're saying is that it's a good word. It's about know your network, not only about your client, but especially everything behind it. What I do not completely understand is it's all about the data which you gather. In the open source, so you're using open source data. You're not using data from your client itself.
Or most data we have currently is open source, but also we have private data because, as you probably know, a lot of countries have business registries and other information which is private and is available against the cost. So we blend both private and public data.
Yeah, because I think you need everything to give a precise indication
Indeed.
about
Indeed.
what you're doing. And especially if you're doing transaction monitoring, you probably need data from the client itself.
Indeed. So this is another side of the project, which is not presented here, but it's another feature where we can connect. For instance, we run an experiment with Swift, with ISO 20221, where we can collect messages from the Swift open data application, and we can extract information for NLP and try to enrich our let's say network. And basically is one of the very few applications where you have screening and transaction monitoring in the same platform, having one unique backbone.
Okay, I missed the last words because you was in a freeze, but was it important, the last word? The word
graph-oriented database. So the backbone of our tool, it's a graph-oriented database.
Okay.
So everything we present is a network. It's not. We do not think in terms of pictures. We think in terms of network.
Yeah. You're creating the spin. You have the that's a good way to make it visible. Absolutely. And it's probably a lot of work to understand, especially the transactions. I can understand that if you have the right analytics tool, that you can do a lot of work in the open source, and then you have the layer with the data from the client itself, so you make it more intelligent and more precise. But taking a deep dive in the transactions of a company means that you have to do a lot of work.
Indeed.
And how are you doing that? Is that it's probably completely automated as well, but you have to. I can't imagine that you can do it. That you can do everything online, so you have to be on premise as well.
Yes, definitely. So this part, it's part of, for example, for exchanges or for brokerage firms or wherever there is open marketplace, this can be done remotely. We run a pilot for one of the marketplaces run for the European Commission. For bank in particular, due to all the privacy, it needs to be on site. So this is where our value proposition teams will engage with the financial institutions and to see what relevant data can be intersected and joined with our application, or how our data can be relevant for them. So that's indeed a way that we are adding and we plan to add value to our customers.
Okay. And who is your client?
So currently we have several clients under NDA. We have a French private bank. We have VC from the Netherlands, and several law firms. Also, this is what we build is also very relevant for legal firms, and also we are in discussion with the British marketplace where they are exchanging financial instruments.
Okay. So they're all pending. They're not on board already as a client.
No, they are some. There are revenues and just the only thing pending. We have a proof of concept with Sberbank, which is a leading Russian bank. So we're gonna deploy one of the applications for all the commercial users of the bank on their app, and that's it's basically not yet. We hope to have it next week, okay. But yeah, this is.
Okay, and probably the last question to give some comfort to Gabrielle again. With how many people are you doing this work? Because
not enough. So basically, we are understaffed. We have a team which is we have currently 7 engineers, 2 internees, and 2 people which are doing in the marketing and sales. One of them being an advisor, which is not on payroll.
Okay, and there are how many founders? Or are you the only one?
Mainly it's me, and we have 2 other founders, which are the tech leads of the firm.
Okay. Okay, great. Thanks. Sounds good.
Many thanks.
All right. Thanks, Marius. And thank you, Michael, again. So again, please remember to rate Marius's pitch, as well as give us some feedback on the experience you had today with the Hopin platform. But now, in any case, with that said, I think it's time to move on to the last pitch of today. The last pitch of today will be given by Advanscreen. Advanscreen is a regulatory technology KYC information aggregator engine, and one of their key strong suits is offering a one-stop shop aggregator for public sanction lists in one consolidated search engine. But in any case, today we have Idan Levi to tell you more about what they do and how they operate. So Idan, whenever you're ready, feel free to share your screen and take it away.
Thank you very much. Thank you, Gabriel. Just sharing it in a second.
You're safe over there.
Sort of. I'm just hoping no sirens will interfere with the pitch.
Okay.
Thank you for asking. So just a second. Okay, can you see my screen?
Yes, but you're not in full screen yet.
Oh, now?
No, not yet. If you can click probably start presenting, because I just see the whole PowerPoint window.
I'm sorry, just a quick question.
Yeah,
just
no problem.
1 second. Okay, how is it now? Still not in full screen?
Yeah, it's actually still not in full screen. But otherwise, I suggest you can, because we can see the slides quite well. So otherwise, I suggest you just get started.
Okay, just to make sure when I move it, you see it?
Yeah.
Okay, so I'm sorry about this.
No problem.
Okay, so let me, thank you. So hi everyone, I'm Idan Levi and I'm co-founder and CEO at Advanced. I'm an Israeli anti-money laundering professional, lecturer, advisor, and entrepreneur. So let me start with a question. What does companies like Apple, Expedia, Pakar, and Black & Decker all have to do with cross-border money laundering and economic warfare? Well, the answer is that these companies, among many others, were fined just a year and a half ago by the US Treasury as part of an unprecedented cross-industry amount of over $1.3 billion paid for engaging with a sanctioned person or entity. Yes, the EU, US, and other countries of the world are all separately publishing lists of people and firms that are illegal to engage with, and regulatory pressure is on the rise. But it certainly doesn't end there. Legal engagement, engaging with a sanctioned person or entity, can lead to bank rejection, payment freeze, and major reputation loss. You may all heard of KYC, which is Know Your Client, which is basically a list of background checks designed for risk classification purposes. Basically, my KYC will give me my client's initial scoring, risk scoring, to meet or not meet my risk appetite. However, if we zoom into the KYC process, we'll find that sanction screening to stand out as the only mandatory procedure required from almost any business prior to engaging with clients, partners, or suppliers. In fact, sanctions is a go, no-go procedure that precedes all other KYC routines, and for most businesses, stands on its own. Now, banks have been struggling for years with their over-packed compliance division, struggling for years to comply with these screening duties. I know that firsthand, working for over a decade in the banking industry as a lawyer and a senior compliance manager. But it's much harder when it comes to the financial and the non-financial SMEs, literally millions of businesses worldwide that are legally required to screen, yet have non-trained staff and less resources. So the problem we found is while all businesses around the world are obligated to screen, the financial solutions, the solutions that are out there all address the financial industry and are not fit for the majority of the market. That's exactly why we founded Advanscreen. With a SaaS solution, I'm sorry. And that's exactly why we built Advanscreen. Advanscreen protect businesses from illegal engagement with a SaaS solution applicable and accessible to any business from any size, sector, or knowledge level. We basically took all the sanction lists, the most wanted lists from all over the world and aggregated them into one powerful search engine. But that was the easy part, because on top of the data, we started to build the first of its kind virtual compliance officer function, AI function that will offer our clients access to worldwide information in a way they have not experienced before. The virtual compliance officer can read and analyze information, interact with the user, and offer data-driven insights. It can quickly resolve potential matches, which constitute 98% of the potential matches, and replace time-consuming human research. So while KYC companies are building complicated tools for the highly experienced financial industry, we have built an advanced yet simple screening tool that is fit for everyone. And while KYC companies answer your screening question with another question, we put to use our market disruptive instrument, the virtual compliance officer, to provide you with an educated go, no go answer. With unique pay-as-you-go plans, Advanscreen is easy to join, simple to use, and is designed to help millions of businesses around the world comply with increasing regulatory pressure. Founded in 2018, we see real revenues from paying SMEs clients that use our user-friendly blacklist search engine. In fact, we are so simple and user-friendly that the Israeli Ministry of Defense has recently approached us to deploy our search engine in their website. Yes, we are about to become officially endorsed by the Israel National Bureau for Counter-Terrorist Financing, making Advanscreen the first company of its kind in the world that receives such acknowledgement. We know sanctions, and this is what we do best. Our clients are SMEs from all across industry, financial institutions, and KYC firms that trust our uncompromising implementation of sanction countermeasures. We are raising 1 million euros that will be used for growth hacking and online marketing, as well as for building our AI function virtual compliance officer. Looking to make Holland our headquarters, we are seeking Dutch companies that wish to try our technology and find synergetic partnership. So if you believe, as we do, that all SMEs should have an easy access and affordable access to top-tier screening tool, then we're happy to, if you contact us. Thank you. Sorry about the technical difficulties.
Thank you, Idan. Thank you for the presentation, and no problem. The presentation was really clear, so don't worry about the technical problems. And yeah, just one note, as usual, before we go to in the Q&A session. I'd like to remind you one last time to rate Advanscreen's pitch, so that at the end of the Q&A we'll be able to communicate who the best company pitch for this session was. And secondly, a quick note for Manuel from Privasee. I see there's a question from the audience, so I'd invite you to answer it in the chat box. So now, without wasting any more time, I'll leave the word again to Michael, kicking off the last part of the event.
Yep, great, thanks, Idan. If I'm trying to summarize your story a bit, if you're talking about KYC, it's not only for the financial industry, but this is for also the non-financials, as you mentioned. So that makes it quite interesting as well, and offering what you call virtual compliance officer to more than only the financials. That makes it also well. The next question is, how do you focus if you're talking about the sales? So what is your next step in the sales process? How do you think you can acquire clients without having a specific focus?
Yeah, well, that's a great question, because we have a very diverse client base that kind of demonstrates our point that a lot of businesses from cross sectors basically need to screen their counterparties. And I'm not talking about the whole KYC process, I'm just referring to the sanction screening part of KYC, which is basically the go, no go answer. So we have a diverse client base with limited marketing activities. My partner, Oded, is an experienced entrepreneur, and he's the expert in product development and online marketing, and he was the former head of 888.com's cross-border division. So we plan to utilize all digital channels and see what converts best, because the market is wide, as we said. It's quite wider than just focus on the financial KYC. So we plan to utilize digital channels and see what converts best and go full power that way.
Okay, so you already have you already have clients.
Yes, we have over 100 users, but over 25 paying clients, including via API connectivity. Yeah, and excluding renewers, of course.
Good. It's about the public sanctions list and the deep web, as you said. So,
yeah, right now we're focusing on public sanctions lists. We plan to add. We have a detailed plan, a roadmap for the upcoming years to add 20 more sanctions lists, and I'm talking about Interpol. I'm talking about FBI, Most Wanted, and all other lists that lie beside the sanctions list. Everything to give our clients more value.
Good. And how many people are working in your company? It's only the two you mentioned, so yourself and what's his name?
Oded.
Oded.
Yeah, we are two co-founders, and we have a programmer who's on the payroll, and we are 3 people right now.
Okay. And what is your pricing model? Is it about the user payment per user, or what?
Yes, it's a SaaS solution. So we kind of broke the bundle of the subscription fees of all our competitors and allowed a pay-per-screen method, meaning you can purchase as many screens as you predict, and you don't have to pay like yearly subscription fees. Our annual contract value, it's backed with numbers, is around 700 euros, and it's quite low. But once we launch our virtual compliance officer, we believe that we can double it and even more.
Okay. And what about competition? Is because you have your specific focus on sanction lists and deep web. That's not the complete story. So how does it work if somebody else offers also other?
Yeah. So what we saw is that there are hundreds of KYC companies out there, but when it comes to the sanctions part, most of them rely on several vendors that we all know, those giants. So we don't see KYC firms as competition rather than partners. We are in talks with some of them. So we see a quite wider market, and as we go, I mean, we can quite easily build a KYC platform on top of it if our clients should demand it.
Okay. That's what you meant when you said that you were looking for synergetic partnerships.
Yes. This, of course, and of course, venture capitals and companies that want to try our technology.
Okay, great. Thanks.
Thank you very much for having us.
All right.
Take care over there. Yeah.
Thank you.
Thank you, Idan. Thanks again for your presentation. And thank you, Michael, for the last time for handling the Q&A session. And now the moment we have all been waiting for. It is time to announce the best company pitch of today. And I am actually receiving in live the results from my colleagues. And yes, they're in. So today is for the winner of the monthly meetup, May edition, is Advanscreen. So Idan, it's good that you're still here on stage. Feel free to say a few victory words if you'd like. And yeah, congratulations.
Thank you very much. We're humble and excited to be taking part of this wonderful event, and thank you very much for whoever scored us. If you have any questions, we're free. So thank you.
Great. Congrats again.
Great.
Thank you very much. Bye-bye.
Bye-bye. So yeah, now just a couple more words on upcoming events before we close off today's session. As you all probably know, Amsterdam FinTech Week is coming quite fast, and it's coming from the 4th to the 11th of June. And it's good to keep in mind, you can see already a few of the companies involved in the week in this overview. But what's interesting to know is that next week we will be announcing the speakers that will be participating in the week. So I suggest you to stay tuned via the Amsterdam FinTech Week website or Holland FinTech channels to know more about what's going to happen during that week. And if we go to the next slide, we can focus on some upcoming events before Amsterdam FinTech Week or also during Amsterdam FinTech Week from Holland FinTech. I'd like to renew my invitation, as I do every month, to the next edition of the monthly meetup on June 11th between 4 and 5:30. This will be a special edition because it's going to be the final event of Amsterdam FinTech Week, where the best presentations of the week will get the chance to present live. So tune in for that. That's definitely going to be an interesting session. Then we have some open events coming up. One is a recurring one, the Flash Friday. This is a fireside chat hosted by our very own Don Ginsel on Friday morning, every Friday morning, with a different host, with a different representative from our member base to really discuss the most important developments within the fintech space of that week. And lastly, next week, today we've talked about privacy quite a lot, and next week we will have an event, a panel discussion actually, around the difficulty in striking the balance between personalization and privacy. And to discuss this, we have quite an interesting lineup. Representatives from Intellias, FinTech OS, and Yole Technology Services will be joining the panel discussion. With that said, this marks the end of today's session. So I'd like to thank you very much, Startup Bootcamp, for setting this up with us. And thank you to all the pitchers. And of course, thanks a lot, Michael, for joining me in today's session and helping me with the questions for the audience. And in any case, I would like to wish you a great weekend ahead and hope to see you all next month. Good luck. Bye-bye.
Okay, so we've got a tight schedule. I'm going to kick off. So let me quickly introduce myself. Could you please, if you're not presenting, go on mute?
Yeah.
And Ravi will take it away. You'll kick off. So maybe shortly introduce myself, because we've got a nice audience. My name is Esther Groen, and as introduced by Gabri, I'm currently working with Holland FinTech, and I'll be your moderator for today. Basically meaning that I'll introduce our speakers, they'll pitch their pitch, then the audience can ask any questions, and we've got a 10-minute time slot per pitch. So I'll be very strict about that. So that's not trying to be rude here, but just trying to stick to the schedule. So for today, we'll kick off with 4 great pitches. And Ravi Yakodia, can I please give you the floor? You're the CEO and co-founder of Coupay, and we're very curious to hear what you have to tell us. Please take it away.
Thank you. So I'll just share my screen and hopefully that works okay. Can you all see my screen? If one of you can confirm, that'd be great, because I can't see you anymore.
Yes, we can.
Okay, great. So
perfect.
Hello, everyone. I'm Ravi, co-founder of Coupay. This is my second venture. I've had a successful exit prior to this, but this is a lot more closer to my heart. At Coupay, we are helping small businesses travel from sales to cash faster, leveraging open banking. Now, I feel that post-COVID, that's something that they need more than ever before. And one of the big barriers to this, to getting cash in the bank, is late payments. I personally connect with this. So this is when I was 19 years old. My dad had a small trading firm in India, and he would send me to his customers to collect on late payments. It wasn't fun at all, but I saw the devastating impact it had on his business firsthand. Today, it's ironic that 1 out of 3 SME invoices are paid late in UK. 26 billion of their cash is tied up. Now that's so much more valuable now post-COVID than it was ever before. And 11% of global revenues are paid late. And now if that be the situation, one would then think, okay, so are all these customers who are not paying up on time, are they bad, evil people? Well, actually not. So there's been research carried out multiple times which says that actually lack of process and ease of payments or lack of it is a significant contributing factor. And more so when the customer is also a small business individual who wants to defer admin activities for later. This is where Coupay comes in. We help businesses get paid easily by making the whole journey very seamless and at a fraction of industry cost. So I'll play a quick 40-second demo for you so that you can see how it works.
Introducing the smarter way to bank transfer. Coupay saves customers time by relaying your transaction details straight to their bank. So how does it work? You key in what your customer owes you and send them a payment request over text or email. Your customer taps on the secure link and chooses their bank, which opens their banking app. This takes them straight to the confirmation page where all of your account details are pre-filled by Coupay. They simply confirm the payment and you get the money instantly.
So as you saw, that was as easy as that. Now, some of you who are Netherlands-based will be familiar with something like this from Ideal and Tikkie. But unfortunately for the rest of the world, those systems did not exist until open banking. And now we are trying to drive that in UK and then in Europe and globally. Sorry about that. So we are targeting 23 million micro businesses in Europe. In the first phase, we're looking at B2C businesses like tradespeople, so electricians, gardeners, plumbers who come into our homes and help us out, and other home-based businesses. So these are people who monetize their passion, their skills, and have a side business as well. Now, in our roadmap, what we have today is free invoicing. So these small businesses can come to Coupay platform and just send invoices for free. If they want, they can use our payment solution, in which case they get a QR code and pay with an online invoice to make it really easy for their customers to do an account-to-account transfer. And that costs them just 20p. But in future, as we help more and more small businesses benefit from the ease of payments, we would like to bring to them more products so they can travel from sales to cash faster, i.e., say, lending against invoice. Now, the question is, are businesses liking us and are their customers trusting us to pay via Coupay? Now, we did our commercial launch in February. We've had a few very good months, 35% month-on-month growth of user activity. So the chart you see is all activities. So businesses have sent either invoices with or without payments or just standalone payments from Coupay. In April, we already crossed 800 transactions in the month. Now, what's also good to note is 30% of all transactions is actually turning into completed payments by the end customer. So that's a good positive sign that end customers are also trusting the whole system of account-to-account transfer via Coupay. And our cost of sign up is really under 10 quid. So that's also a very good sign, and we are already ready to start scaling it up. I already talked about myself. Karuna is our CTO, and he's been with financial services and products development forever. Last he built was the 3rd largest share trading platform in UK. We're looking for a seed raise by end summer. So would love to talk to you if you like this space and if you like what I've shared so far. Thank you so much. I'll stop sharing my screen now and happy to take any questions that you may have.
Thank you, Ravi. That was a nice pitch. Had a lot of, I think, had the important things that in it, focusing on your product, your team, your plan, and what you've been doing. Are there any questions from the audience? Then I will ask I will ask you a question there, Ravi. So I think it's interesting, especially your user group being the more micro businesses. particularly driven also, I think, from a more financial inclusion type of aspect. What makes you special, and how do you want to really reach out to this group? Because I understand the user group, but the fact that it's micro, it also means a lot of volume. What's your go-to-market for this user group? Maybe that's a better question.
Yeah, I'm happy to answer both the questions. I guess what makes it special is I'm not from a payments industry, so I come from a family of small businesses. So I suppose we can connect with the small businesses from the way they see the world, rather than how a payments company would see the world. And I think that sets us apart in how we reach out to them and how we start to kind of approach and engage with them, which I think is already showing in some of our metrics. So already 2 months into commercial launch, we've already got to some very strong metrics and cost of sign up. As you rightly said, it's all about scale. So we are not looking at any heavy onboarding. It's all based on an inbound marketing funnel, and that's what we are building over time, which means that we send our message out there through digital marketing, through partnerships, and we hope that small businesses would find it interesting, and then they would come to us, explore us, and if they like us, they'll sign up. But it's really meant to be a very, very light touch approach, with no human intervention, and that's what we're kind of seeing now, which is good. Now we do get some customers who reach out to us on chats and calls to kind of ask one question or the other, but that's all learning for us in the early stages, so we can keep enhancing our product and clarifying them.
Yeah. And why should investors invest in you? What makes you as a team special?
I think I answered part of that already in terms of our focus and how we approach this. So if you look at a micro business, what's important for them is sales, and then getting the money for that sales. That's all that is important. Many of them are not even tax registered for VAT and other things. So that's their world. And if we can offer them a simple platform which can help them do that, I think that'd be great. There aren't too many platforms out there which is focused on micro businesses. I mean, even if you sign up for a basic accounting software, you have to pay 12 to 14 pounds a month in UK, at least, to even start, doing basic accounting and invoicing and things like that. So I think that's the space we are going after. We've already shown good traction, which we hope to keep building momentum. I already have an exit in the past, so I know a little bit about how to set up businesses and scale it up. So I think those should be hopefully good signals for investors to find us interesting to have a chat.
Yeah, cool. Then before we go to the next one, I would like to ask the audience to vote for your pitch, for Coupay's pitch. So if you go to polls and you scroll all the way down, this is where Coupay is. And you can score them between 1 and 10, 10 being very good and 1 being not so good. If you please do that, then we will move on to the next pitch. So in the meantime, I will start introducing eVostro, who's our next pitch. David Wilson, Director Public and Investor Relations, will lead us through your story. David, the floor is yours.
Thank you. Good afternoon, everyone. I'm David Wilson, one of the co-founders of eVostro. Do you want me to put my slides on, Ayane, or are you in control? Forgive me. Okay. I can't see any slides. Can we...
I've been on mute and I wasn't sharing my slides.
Okay,
So
I wasn't expecting that.
Can everybody see my screen now?
Yes.
Very good.
Okay. Apologies. Right. As I said, I'm David Wilson, one of the co-founders of eVostro, and eVostro offers a real-time solution for correspondent banking as a service. First, I'll introduce you to the team, and then we'll discuss what we see as a major issue for both small banks and fintechs before we move on to our innovative solution. So our CEO is a former global head of banking and treasury at Paysafe Group, managing over 16 billion euros of client funds. CV also includes Vocalink, Swift, and the European Central Bank. We also have operations and compliance expertise from WorldPay and risk management expertise from ING UK. In addition, we're backed up by a stellar group of advisors, the former EVP of both Visa and Barclays, a former general manager of MasterCard, a head of mobile payments for PayPal, and a former executive from Rabobank, ABN AMRO, and Citibank. So combined, that's over 120 years of experience at the payments. And this is what we've discovered. Some years ago, correspondent banking was seen as a solution to avoid the expense and the logistical challenges around small banks having to open their own branches over cross-border payments. Correspondent banking introduced third parties into the equation, middlemen that sat between the originating bank and the destination bank. Now, eVostro sees this as a problem because correspondent banking is antiquated, costly, and slow. Cross-border banking relies on the SWIFT network, a network that wasn't specifically designed for this purpose, and on third-party intermediaries that add extra layers of expense and time delay. And neither is value payments, and yet 70% of all daily volume traffic falls into that category, incurring high correspondent banking. However, traditional banks and fintechs have no other alternative, so they have to. Globally, there are over 25,000 banks using correspondent banking, a system that's not only more costly, but also takes much, much more time. And now this is the problem, but for us, of course, it's a great opportunity. We think eVostro is uniquely positioned. Nobody is offering a complete alternative to current SWIFT and correspondent banking, and one that is both faster and less expensive until now. Now, I know you probably think that's a bold statement, as some of you may be aware that there are companies attempting to solve parts of this problem, but we believe that we're unique in offering a comprehensive next-generation solution. eVostro offers real-time correspondent banking as a service to traditional banks and fintechs, taking out the middleman. A much better alternative to SWIFT via a SWIFT protocol, which eliminates the need for having correspondent banking and the associated costs these bring. Our solution makes correspondent banking much more efficient and in turn enables banks to enhance revenue streams from e-commerce and cross-border remittance payments. These global payments are much less expensive and significantly faster, executed in under 3 minutes compared to the current 2 days. To envision the opportunity here, the UK alone is valued at $3.5 trillion, and the EU remittance market is valued at $38 billion. It's also of note that we already currently using SWIFT, and they can connect to our service straight out. Our unique network of partnerships gives eVostro the cutting-edge technology that empowers us to solve this problem. TrueLayer gives us access to open banking. Incentive gives us the ISO 20022 switch that connects us to SWIFT. IFX gives us currency, gives us access to global remittance and overseas local payments, while Modular gives us licenses and access to central banks, which of course is critical in terms of minimizing risk. Our partners have been individually helping banks reduce the cost of correspondent banking for over a decade, but now with our unique orchestration, eVostro is offering true next-generation real-time payments and liquidity. To update you on our current status, since graduation bootcamp, we recently succeeded in being selected from over 100 applicants to participate in the Visa. We're in the process of establishing our Dutch BV, which will allow us to apply for an EMI in the Netherlands. We're very excited that since graduation of Startup Bootcamp, we've now got 4 new clients, and the first one is literally this week. We're currently raising a €500,000 pre-seed round in the lead up to our €2 million seed round to help us with our licensing. So, if you like the sound of a disruptive next generation solution delivered at a fraction of the cost and in a fraction of the time, or if you'd like to track our fundraising journey, then please don't hesitate to get in touch with us. Thank you very much for listening, and we'd be happy to answer any questions.
Thank you.
Thank you, David, for this presentation. We have one question from the audience, which is from Ankit Pradhan. And the question is, how do you track the payments over the complete chain?
Hi, Hi, I guess there's a number of ways of doing that, but one of the latest inventions by Swift is Swift GPI. It's what Swift GPI does. It actually introduces a new, I don't know if you know Swift formats, but it introduces a new header block in block 0 of a Swift message. This header block basically puts inserts in to every bank and every partner that's touched that message on its journey from alpha to omega. Typically, there are up to 4 in total. What we're actually doing is circumventing that. What we're actually able to do is on the sending side of the bank, we're able to interpret that the message would have gone to Bank B in the UK, to Bank C in New York, and to Bank D in Milwaukee. Knowing that that's the path it was going to take, we actually intercept it and we actually fill in the header and tell people that we basically managed to route the lower cost payment directly into the real-time payment rails between the two. So we track messages very similar to Swift, and we build our own pseudo header on an MT103 to track every node that's touched it. Usually, we bypass all the middle nodes where it's low value, and where it's high value, we follow the Swift GPI route. I hope that answers your question.
Thank you. And I would again ask the audience to rate your pitch. So please go to the polls, scroll down, and you will see that eVostro is at the bottom, the second one from the bottom. Please score. One question. So if I hear it, you're basically becoming the fast and efficient new middleman for your clients. Is that correct?
Yes, that's correct. Effectively, the way, and people might find it strange, but the way Swift works and the reason it's slow is that it's a prepaid settlement system. In principle, you send a payment, but you're not actually moving money. You're telling a bank that you want to do something. And what the bank is doing is telling another bank to use its money to do something you want to do. But the trouble is you need at least 3 of them to participate, and this is the reason it's slow and expensive. So the biggest problem is not the communication problem. The biggest problem is the liquidity problem.
Yeah.
So one bank has to have an account with another bank having an account with another bank, and they've always got to have liquidity, and they've got to manage the liquidity across 4 banks. Now, if you think of Bitcoin, okay, or any of the cryptocurrencies, or the new central bank issued stable coins, which unfortunately don't work on the same rails as Swift. They might one day, but they don't now. Whenever you send a Bitcoin, for example, or a central bank cryptocurrency domestically in mainland China, it arrives very quickly. It can arrive in less than a minute. You're not sending an instruction, you're sending a value.
Yeah.
So the trick is, how do you make the old system of Swift, which only sends instructions, interact with a new system that sends central bank coins held at a central bank, guaranteeing delivery? That's the problem we're solving. What we're actually doing is not sending.
I need to ask you to close off your answer. I'm sorry. So I'll give you a very short time to close off your answer, please.
Sorry, this one? Or? No, the answer you were giving. Oh, yeah. In a nutshell, effectively, we're tokenizing the payment and we're actually moving a value instead of the original Swift cover payment message.
Perfect. Thank you. That's clear. Okay, thank you very much for this presentation. We will go to the next one, which is WayApp Pay. And Oscar, are you there?
Can you hear me?
Yes, I can hear you. Maybe it's good that everybody who's not speaking goes on mute and off camera. Thanks. Ojana, will you also put your camera off, please?
Can you also see my screen?
Yes, we can see your screen.
Okay.
So please, everybody, Oscar Anzola, CEO and founder of WayApp Pay. The floor is yours, Oscar.
Well, thank you. As she said, I'm Oscar Anzola, CEO of WayApp Pay. Today, under these difficult social and economic times, especially now, we believe local communities are in need of technology that supports buying local. A technology that brings consumers and local businesses together. We are that technology. We're WayApp Pay, a commerce solution that empowers communities. by fostering what we call the prosperity community triangle. 3 elements to that. We offer consumers contactless payment and loyalty features that reward them. We offer local businesses lower cost payment and marketing features to increase sales through customer engagement, while the whole community benefits from more innovation, more jobs, and more taxes. Our commerce solution starts with a lower cost payment alternative. Identifying the customer is a start to a completely new customer experience, something that traditional payment methods do not offer. We provide the complete tools to pay and get paid. We offer IBAN to IBAN payment, and we're getting our license from the Bank of Spain. Payment initiation. We offer the solution under a SaaS model powered by our secret sauce REST API. This API has security and scalability features that are patent-worthy. We're scratching the surface on business intelligence and analytics and have an extensive AI and ML roadmap ahead of us. We integrate a lot of marketing features and value into the payment, and we connect to value-added services from other fintechs, banks, and other types of partners. In WayPay, there is no middleman. Money flows directly from the customer to the business account. This saves, obviously, money and the sharing of information of customer and payment information with third parties. Our merchant customers save money on processing fees. They replace the use of cash with a completely contactless form of payment. They improve cash flow by benefiting from our prepaid features. They can service twice as many customers during peak hours because paying with WayPay is extremely fast. And they can create an online presence and digital sales channels. Our community customers are leading the way into helping local businesses, as is Las Rosas Madrid. They distributed 1,000 digital vouchers loaded with 10 euros that could only be spent in whitelisted local community business. This has triggered the local multiplier effect that generates prosperity and economic growth. We're very excited about the traction that we have across communities in Spain, shopping centers where we're seeing a lot of value in our solution, and some main retailers that are interested in IBAN to IBAN payment. Compared to others, with WayPay, businesses get the identification of the customer, they can collect data, and they can engage with them. And this is really the path to more business and loyalty. WayPay is unique in its community approach. We create a completely closed and controlled payment ecosystem, and we're way much more than a payment method. We're all about the payment experience. The contactless payment market opportunity is huge. We have a very leveraged commercial strategy in which we're targeting counties first. In Spain alone, there are over 8,131 counties. We also have good traction, as I mentioned before, with chambers of commerce and shopping centers. And we're about to launch a massive digital campaign to land more community customers faster. We do this with a flexible pricing model that is based on transaction commission or a fixed fee, and the marketing features are priced by active users per month. We have a great team. We completed a 280K euros seed raised. We have assembled a star advisory board that are all very active in the course of the business. We have a team with extensive corporate and startup experience with a previous successful exit. We're looking for sales lead and warm intros to communities and merchants. We're very interested in partners like other fintechs, banks, and software vendors that can add value to our community proposition. And we're looking for investors to start planning our Series A raise. We offer all a path to prosperous communities. We are WayPay. Thank you. I guess we're open for questions now, right?
You're definitely open for questions. Are there any from the audience? Well, you're complimented by Marian that you have a great pitch. Indeed, it was quite complete.
Thank you.
Oscar, one question. What are your plans? What are your biggest thing? What's your biggest event you expect in the next 6 months for WayApp?
Selling. That's what I mean. We're just as of today, we might have gotten another community customer. We have a verbal. We have 2 verbals on shopping centers. So it's really about delivering on the value proposition that basically we've said that we're going to do. So we're just dealing with the traction. I mean.
And how are you going to do that?
Okay, so right now we have 2 salespersons. We need to. As I said before, we're working on a massive digital campaign. We have a great partner in Heraldist, which is an agency that has helped us with our branding and all of that. And we are expecting in the next month or so to launch this massive campaign targeting Spain only. Okay.
Yeah.
And we expect to get a lot of customers from that. Okay.
Okay. Cool. Thank you. Then I would again ask the audience to go to the polls and rate the WayApp pitch, which is, you don't have to scroll that far down. Because we, of course, have to identify a winner at the end of this session. Not unimportant. Okay, there are no more questions, Oscar, so I think you had a very comprehensive pitch.
Thank you.
That means that we're going to move to the last pitch for today, which is RealRate, given by Holger Bartel, the CEO of RealRate. Please, the floor is yours.
Thank you a lot, Ista. Let me go full screen. So, hope everything is fine. Welcome to RealRate. So, RealRate is a rating agency, and we're using explainable artificial intelligence to create fair, unbiased, and ethical company ratings. And big companies can use our rating seals to put them on the very top of their website and to build trust with their customers. So when I was working as an appointed actuary in a big insurance company, I was talking to the rating agencies. And one day our big boss came in telling the agency, listen, I'm expecting you to give me a AAA rating. If not, there are plenty of other rating agencies out there. And then he left. Wow. So at that moment, I really understood the rating won't be fair, but totally biased instead. It's crazy. It's like a pupil asking his teacher, paying his teacher to give him a grade. It's a huge conflict of interest. And we're talking about a $10 billion market. At RealRate, we hate it and we will change it. Hi, my name is Dr. Holger Bartel, CEO and founder of RealRate. At RealRate, we use our award-winning artificial intelligence software. And we made it explainable. So there's no black box with RealRate. Totally in contrast to the big rating agencies like Standard & Poor's, Moody's, and Fitch. We have no human analysts. We just got our software running. And really, it's fair, reliable, and it got fairness implemented into his brain. So I could tell you a lot about the software. Most important is, with RealRate, you can realize your financial strengths within just 2 minutes instead of having to read 200 pages of a business report. So at the very top, we input the publicly available balance sheet data, and at the very bottom, we get out the financial strengths. And we can explain why you got a good rating. So we provide a nice colored graph, like you can see it here, showing your strengths and weaknesses. This is our secret recipe. This is what we call explainable AI. And indeed, we are revolutionizing the rating market, really putting it upside down, gaining independence. So we first create a ranking list, like in Germany, we rated all 70 life insurers. And afterwards, we address just the best rated ones, and they are allowed to subscribe for the RealRate seal of approval. they can purchase the rating seal you see here and put it on the very top of their website. So RealRate was awarded being one of the most promising German AI startups. We got an award-winning AI software, and myself, I'm honored to be named one of the top InsurTech CEOs. Right now, we are focusing on selling rating seals, but the vision is broader. There's more to come. We can use our unique technology and apply it for internal credit ratings for banks, providing due diligence services for the mergers and acquisitions industry, or even to set up an AI investment boutique. I am Holger Bartel. With me is Harry, our COO, and Karl, our CTO. They are all brothers of mine. We are a great team. You should know we've been founding several startups before, and we've been raising capital from Bertelsmann, Klingel, on Vista Bank. And now we are all working to make RealRate a success. So we finished Startupbootcamp Netherlands, and we just raised 100,000 euros from the business angels, which is totally great. A next step will be, we are already planning a small Series A round, and we're looking for an interested lead investor to help us with that. We think it's the right time to do AI in finance, and we want to go fast. We are using the 100K to enter the US market right now. And once we got the traction in the US market, we can go everywhere. So hope you got as excited as we are. Thank you.
Thank you, Holger, for your presentation.
Welcome.
Again, I would like to ask the audience to see if you have any questions. And there's one from Suresh Dasila. At RealRate, what all user data do you collect to arrive at the final rating?
Yes, so interestingly, we restrict ourselves just to publicly available data. You need all the balance sheet data, they need to be published. The idea is we can perform benchmark analysis, and we're not biased by individual data we can't check. So we restrict ourselves to audited public data, which is a huge difference to all the other rating industries, of course.
Can you explain that a little bit in more detail? What's the biggest difference?
So normally you're commissioning a rating agency. It's a human. He's visiting you. He's talking to the board, reviewing the risk management processes, and demanding you to provide you with 100 pages of individual data, which is not published. We do not use that approach. We think we can avoid any conflict of interest because we are not paid in order to provide a good rating, which is a huge conflict of interest.
Yeah. Another question from the audience, good one, is the audited data, the audited public data, not often outdated?
Yeah, in a sense it is, to be honest. So it takes some months until the data is published. Sometimes we have quarterly reports, so we could update it within a year. But for us, most important is having a ranking, being able to perform a benchmark analysis, and we are okay with a little bit delay. But once we got the data, we have a software. We just need to press the button, and the next day we can provide the rating. So we are not the last one to provide the insight. Indeed, we are quite fast.
And I think it's really interesting that you're using this technology, AI. There's a lot of talk about it, and I think also a lot of promise and maybe expectation. And I think looking also at the questions that you get, Holger, it's very much around data and the quality of data. But another big topic is around data bias. How do you deal with that?
Yeah, indeed, it's about data, and I'm a fintech founder. I've always been founding companies in AI, blockchain, always with relation to data and fintech. So the idea is the data might be biased, but that would not be huge because it's audited data. Yeah. Second is we have a fair AI model. We could disclose it, and there's no bias. So, for example, in finance industry, if you would like to apply for a loan in a bank, you might be rejected. You would like to know why. Maybe it was discrimination with respect to gender, age, ethnics, anything. We would like to provide internal credit ratings for banks too, and we can explain why. And we can show it is totally fair. There is no bias by design because we put in an expert model. We then fit the data. So it's in between AI, machine learning, and expert model. And that's our award-winning technology we've been self-developing.
Okay, thank you very much.
Thank you.
Again, the audience, your final voting for today for RealRate, please go to the polls. Again, it's the one at the top, so that's easy. Please give your number, and then I will wait for the final results and give that back to you. And we have a winner, which is RealRate. Thank you very much, Holger.
That's a little bit unexpected. I'm so happy to hear that. Thanks a lot.
You're the winner. I think it was a very close call.
Congratulations.
With WayApp.
Oh, congrats
so
to WayApp too.
It was a neck. How do you say? I don't know how you say that in English. Actually, it was a very close call between WayApp and RealRate, but you won. So
thanks
congratulations.
a lot. I really enjoyed that great session and all the questions. So well organized. Thanks to you.
Yeah. So